Hey, what's going on? This is Femi, the advocate for personal financial literacy for our teens and high schoolers. If this is your first time watching one of my videos, I pretty much started a financial literacy series where I teach foundational knowledge to our high schoolers and teens. Of course, anybody is free to take any of my courses or classes or watch my videos on YouTube, but the course is specifically geared towards high schoolers, teens, and our youth. So this next video is going to be on the difference between gross income and net income. So let's take a look at the course outline. So the first thing we're going to talk about are the definitions of gross income and net income. Then we're going to analyze an actual pay stub and look at the difference between gross and net income on a pay stub. And finally, we will talk about tax deductions and why we have to pay taxes. Okay, so gross income. So gross income are the earnings before any taxes and any other deductions. Okay, so these are not actually the earnings that you will receive once you deposit your check into your checking account or savings account, or once your check is directly deposited into your account. Okay, so these are not the earnings that you will actually receive. So if you have a pay stub and your gross earnings are $1,000, your earnings that you will actually receive will be less than $1,000. Okay, so net income. So net income are the earnings after the mandatory deductions such as taxes and other deductions such as health insurance, vision insurance, and so on. So net earnings are the earnings that you will actually receive into your account once your check is deposited into your account. And so on your pay stub, which we're going to look at in a second, you'll have gross income and net income. So net income are the earnings that will actually be deposited into your account. Okay, let's take a look at an actual pay stub and analyze the difference between gross income and net income. So this is what a typical pay stub looks like. And in most cases on your pay stub, you will find information on the company, such as the company name and address. Then you will find information about the employee, which is the person that works for the company. So you'll see, name, maybe the last 4 digits of that person's social security number, and the employee ID. And then you'll see check information, check number, pay period, and pay date. And then every check will have a year-to-date summary, which basically means how much earnings you've earned as of the date of the paycheck. So as of 1/15/2019, this person has earned $1,940 year to date. And then the year to date deductions are all of the deductions added up as of the date of the check. So as of 1/15, this person has had a total of $383.76 in deductions. Okay, let's take a look at gross earnings. So on this paycheck, we can see that the gross earnings are highlighted inside the red box. Okay, we can see gross earnings, we can see the pay rate, hours worked, and the current total year to date. So as we talked about, gross earnings are the amount before any taxes and deductions. So before this person had any taxes or deductions, they made $970 in gross earnings. And to get that, you just times 40 hours by the pay rate, which is $24.25. In this section, we're going to talk about deductions. As you can see, the deduction section is highlighted. And a deduction is any amount that is subtracted from your gross earnings. So when it comes to employment earnings, there's typically two kinds of deductions. There's going to be deductions that are mandatory, which will include taxes, and there's going to be deductions that are voluntary, which basically means that you can determine if you want to have these deductions or not. So mandatory deductions will include things like taxes, as we can see from this pay stub, and voluntary deductions will include things such as a retirement deduction and a deduction towards maybe health insurance. For most high schoolers and teens that have their first-time job, their pay stub is most likely going to look like this. You'll have your gross earnings, and then you'll have a section that has deductions for taxes. In most cases, for your first job, you won't have any deductions towards retirement funds or health insurance. So in regards to taxes, the employer, which is the person that hires you to work for them, is required to deduct a percentage of your gross earnings that will go towards taxes. And we're going to talk more about this in the next slide, but an employer is required to take out money from your earnings and put those earnings towards taxes. So there's no way to get around any kind of tax deduction. If you have a job, you will have tax deductions. And depending on where you live in the United States, you may have to pay some additional taxes such as city tax and unemployment tax. I want to say in states such as New York and New Jersey, which are considered high tax states, you may be required to pay taxes such as city tax and unemployment tax. Now take note that the Social Security tax and the Medicare tax are a fixed percentage. This means that on all your earnings, you will pay a percentage that is the same. So on this pay stub, we can see the person made $970. So for the Social Security tax, the percentage right now is set at 6.2% of your total earnings or gross earnings. So this person made $970, and then 6.2% of those earnings were taken out, and the person paid $60.14 in Social Security tax deductions. And for the Medicare tax, the percentage is 1.45% of total gross earnings. So this person earned $970, and they were required to withhold 1.45% of their earnings, which means that they paid $14.06 for the Medicare taxes. And then the federal tax just depends on your earnings. In America, the tax system is progressive, and so depending on how much you earn, the tax percentage for federal income taxes could change. And so for this person, they paid a percentage that is 12% of their total gross earnings. So keep in mind that this percentage can change depending on your earnings. And so 12% of $970 equaled $117.68. So these are all the mandatory deductions that this person paid on their pay stub. And so if you have your first time job, if you're a high school or teen looking for a job, keep in mind that you will have to pay mandatory taxes. Okay, let's look at net earnings on this pay stub. Okay, so we can see that the net earnings section is right down here. So for this person, they earned $970 and they paid a total deduction amount of $191.88, which was all taxes in this case. So to get the net earnings, we take the gross earnings and we subtract the total current deductions, and this gives us our net earnings, which for this person is $778.12. So keep in mind that whenever you see gross earnings on the pay stub, this is not the amount that will be deposited into your account. Okay, this is the amount before taxes, and the net earnings will be the amount after you have your mandatory deductions, which will be taxes, and any other deductions. Okay, let's talk about taxes and why we have to pay taxes. So taxes are required to be paid by U.S. law by any citizen of the United States or anybody legally authorized to work in the United States. So you may be wondering where taxes go to. So taxes go to fund different programs and services that are authorized by the United States government. They also go to fund different state programs and services and local programs and services as well. And so some of the things that our taxes go to support are things like police officers, firefighters, city parks, and maintaining our roads and streets. So for any employer in the United States, the law requires that they take a certain percentage out of every employee's paycheck to go towards the payment of taxes. So for example, Target, Walmart, Best Buy, these are people that employ people to work for them. And the law requires that for each employee that the company takes a percentage out of their total gross earnings to go towards taxes. So at the end of each year, the employer will take the total amount of taxes for each employee, and they will send those taxes to different agencies such as the federal government, the state government, and local governments. And the reason why it's done this way is to avoid people from not paying taxes. And so if the employer takes out the taxes from your pay stubs, then there's no way for you to avoid paying taxes. So at the end of each tax year, the different government agencies will take a look at your total income earned and the amount of taxes that were taken out of your earnings. And they will compare the amounts and see if you paid enough taxes or if you didn't pay enough taxes. And so if you paid enough taxes, then you're okay, you're good, there's nothing more that you have to do. But if you didn't pay enough taxes, then you may be required to pay an additional amount to a government agency. And so this will come as a tax bill, and they will send it to you and say that according to our records, you didn't pay enough taxes in 2017, please pay this amount. And in some cases, if you paid more than the required amount, the government agency will give you a tax refund. Okay, we've reached the end of this course on the difference between gross income and net income. I hope you learned something. Thank you for watching. As always, if you have any questions, please reach out to me. I'm happy to help. My email is listed right there. Send me an email anytime with any questions, and I will be happy to answer anything. And also, if you would like any kind of maybe help with budgets or any kind of financial terms or anything like that, you can always reach out to me as well. Thanks again, and I'll see you at the next video.